'Tis why a small tsunami at one beach can be a giant wave a few miles away. All tsunamis are potentially dangerous, eventually may damage every coastline they strike. A tsunami can strike anywhere along most of the U.S. coastline. The most destructive tsunamis, in the U.S., have occurred along the coasts of California, Oregon, Washington, Alaska, and Hawaii. 124. Natural disasters. Earthquake-induced movement of the ocean floor most often generates tsunamis. If a major earthquake or landslide occurs close to shore, the first wave in a series could reach the beach in a few minutes, even before a warning is issued. Areas are at greater risk if they are less than 25 feet above sea level and within a mile of the shoreline. Drowning is the most common cause of death associated with a tsunami. Tsunami waves and the receding water are very destructive to structures in the run-up zone. Other hazards include flooding, contamination of drinking water, and fires from gas lines or ruptured tanks. It's fascinating that just like tsunamis, hurricanes inflict their severest damage not from wind or rain, but from the stormsurge that brings the ocean up over the land. Tsunamis are equity different and that have little warning other than the registering go fein earthquake ain't theory. This compacted time frame sets these natural disasters apart from hurricanes. There is no time to watch them develop, track them as they build, and then predict the area they will hit. Earthquakes and tsunamis come as a surprise and then a mad scrambling shistoid the stricken and in the case of that tsunami one others they have to run for higher ground. Note that with a decent understanding of how they work, let's look at some examples of earthquakes and one particular tsunami. The 1906 San Francisco earthquake. Almost everyone in the United States is familiar with the great 1906 San Francisco earthquake that registered 7.8 on the Richter scale. For geologists, it was the first major quake that was studied with scientific scrutiny similar to the new techniques used during the 1918 Spanish influenza, as professional scientific study was still in its infancy. In their book Earthquakes in Human History, The Far-Reaching Effects of Seismic Disruptions, Gilles Eilinger de Boer and Donald Theodore Sanders describe the cost. There have been earthquakes of greater magnitude, and several have cost many more lives, but few have wreaked such devastation. Throughout the affected area, property damage was inestimable. In San Francisco itself, in an area exceeding 10 square kilometers, virtually every building was destroyed or later had to be torn down, including the entire business district and well over half of the city's residential neighborhoods. Out of a population of 400,000, there were 250,000 left homeless, 28,000 buildings were eliminated over 4.7 square miles. Earthquakes and tsunamis. 125. Photographs show the complete destruction that occurred, not just from the earthquake, but mainly from the fires that ensued. Again, the main event was the initial source of the havoc, but not the primary force of the ruination. This is analogous to the 1918 influenza in which the flu itself was not as the last pneumonia that came with it. It's the same for hurricanes, it's not the wind that causes the greatest destruction usually, but the storm surge. It's like nature is a boxer who fakes a left jab and then lands a big right hook to the jaw. The USGS estimated property damage costs at $400 million in 1906 from earthquake and fire, and $80 million from the earthquake alone. Remember, that's $1,906. Theosix also notes that the death estimate was 3,000, http://quake.wr.usgs.gov/info/1906/casualties.html closing parenthesis. Again, insurance companies were saddled with paying out hundreds of millions of dollars in claims, causing some to go bankrupt. There was political fallout as well, as the mayor and others were convicted of bribery and extortion related to the disaster. De Boer and Sanders suggest that the stock markets, too, lost heavily as a result of the disaster, helping trigger a nationwide money panic in the following months. The scariest thing about the San Francisco quake is that it could happen again. The 1989 earthquake during the World Series at San Francisco's Candlestick Park was caused by the same fault that was activated in 1906. According to the Berkeley Seismological Laboratory, the Thelema Priete earthquake caused $5.9 billion in damages with 63 deaths and 3,757 injuries. It provides a glimpse into what can happen in the future and how unstable this region remains. 1995 earthquake in Kobe, Japan. On January 16, 1995, a 6.9 magnitude earthquake hit Kobe, Japan. This was the largest earthquake to hit Kobe since 1926. Initial reports had 600 dead, thousands injured, and 2,000 buildings destroyed. Like the 1906 San Francisco earthquake, many buildings were destroyed and lives lost not due to the immediate impact of the earthquake, but to ensuing fires that occurred. It also closed Osaka's financial markets and therefore dramatically reduced the amount of trading done in those markets. The last time trading was shut down previously had been in 1964 due to another natural disaster event, a hurricane. Osaka at the time was the third largest city and second largest business center. Kobe was a smaller city, but was home to an important economic asset, Japan's second largest container port. It was closed after the quake. As most readers know, Japan is an island nation and a nation of exporters. Therefore, it was an economic. 126. Natural disasters. Figure 7.2 The Nikkei, 1994-1996. Source. Used with permission from Bloomberg LP. Disaster when one of the key distribution points for those exports had to be shut down. Let's take a look at the Nikkei 225 prior to the event and see that it had been declining since June of 1994, figure 7.2. It had hit a low in late November and rebounded late in December. The quake unsettled a shaky market that plunged 6 days after the quake and would eventually lose 25% of its value by July. That's a big ouch and underscored the opportunity from the event. The 10-year Japanese bond yield had risen for almost all of 1994, moving up 175 basis points prior to the earthquake, figure 7.3. The bond yield went sideways for almost a month afterward and then declined 200 basis points by July. This is not merely 2020 hindsight trading. As in all our event trading examples, we look for situations in which the event provides an opportunity to either accelerate a trend or cause a reversal, sometimes brief, to a trend. In this case, the market was soft and the event drove it further in that direction. Let's look at Kuplefarbing a soft hedge Japanese economy. As an example, Toyota Motor Corporation at the time was receiving 34% of its revenues from sales abroad, figure 7.4. It's hard to receive the revenues if you can't export your product. Thesamegos for electronic product maker Toshiba Corporation, figure 7.5. Both stocks fell after the earthquake. Earthquakes and tsunamis. 127. Figure 7.3 The 10-year Japanese bond yield source. Used with permission from Bloomberg LP. Figure 7.4 Toyota Motor Corporation source. Used with permission from Bloomberg LP. 128. Natural disasters. Figure 7.5 Toshiba Corporation source. Used with permission from Bloomberg LP. With all natural disasters, the biggest losses are borne by insurance companies, and this group saw their shares decline 6%. However, construction companies did very well. They bucked the trend of the general decline of the Nikkei even amidst bribery scandals in the industry at the time involving government officials. Take a look at Sumitomo Mitsui Construction Company, Limited, figure 7.6. It was going nowhere until the earthquake occurred and then rose 125%. Now, that's a nice return in a short period of time, especially after just reporting a drop in earnings of 10.36% for the first half of the year. The great thing is that the price in the stock jumped and then hesitated for about 4 days before really taking off. This gave you the opportunity to get in even if you missed the initial move. 2005 earthquake in Pakistan. The October 8, 2005, 7.6 magnitude earthquake at Hathit, Pakistan was massive and devastating. The impact was felt in Afghanistan and India, as well. It was felt in the major cities of Islamabad and New Delhi. However, the earthquakes and tsunamis. 129. Figure 7.6 Sumitomo Mitsui Construction Company, Limited source, used with permission from Bloomberg LP. Quake hit the distant Pakistani-controlled part of Kashmir in Northwest Province, which are some of the poorest areas of an already poor country. The total fatalities that were attributed to the earthquake topped 80,000. The situation was so catastrophic that even the political tensions between India and Pakistan were set aside as India's Prime Minister Manmohan Singh called Pakistan President Pervez Musharraf and offered help, according to CNN. Nevertheless, the impact on the financial markets was peculiar. This is an excellent example of the old real estate phrase, location, location, location. The quake didn't cause massive infrastructure damage to either the largest cities or key economic assets. Therefore, the fallout from the quake in the financial markets was almost nil. Granted, this is a third world country with relatively small, illiquid, opaque capital markets. But let's take a quick peek at what did happen. The Karachi 100 Index, KSE 100, comprises the top companies from each of the 34 sectors on the Karachi Stock Exchange in terms of market capitalization, the rest depict on market cap ranking. Figure 7.7 shows this index over the time period in October during which the quake hit. Notice that the index went up 400 points in the 10 days following the quake, with cement companies, D.G. Khan Cement, or refineries, National Refinery. 130. Natural disasters. Figure 7.7 The Karachi 100 Index, KSE 100, source, used with permission from Bloomberg LP Limited, leading the way. The wild thing is that insurance companies went up, as well. This is the big disconnect. How can an insurance company that has policies in that country go up during an earthquake of that magnitude? Take a look at the General Insurance Elt, EFUGPA, in figure 7.8. It went sideways and then exploded higher in March. Eventually, the KSE 100 reversed the 400-point rally starting midway through the month of April. Some of this movement has to do with the easy money for stock purchases called Badla financing. This is a system by which investors in Pakistan can buy shares with borrowed cash and then defer payment as long as they pay the daily loan costs. On April 19, 2006, the country's regulator announced that phased out scrapping of these financing. THEX 100 started a decline that took it back to the levels if when the earthquake occurred. There's this agreed point to make for investors. Don't assume the structure of the US financial markets extends beyond the US borders. If you think our regulators are lax or not on the ball, you should take a look at other countries, including places like Japan. Even with Enrons, WorldComs, and Refcos, the United States is still gold standard for the rest of the world. Earthquakes and tsunamis. 131. Figure 7.8 EFU General Insurance Limited, EFUGPA, source, used with permission from Bloomberg LP 2004 Southeast Asian tsunami. The tsunami that hit Southeast Asia in December 26, 2004, was simply stunning in its speed and devastation. Off the west coast of northern Sumatra, a 9.0 magnitude earthquake occurred. The earthquake was so large that it actually impacted the Earth's rotation and made the day a few microseconds shorter than it should have been. The quake generated a tsunami that obliterated the Indonesian city of Banda Aceh, and sent a wall of water that stretched from Sumatra to Sri Lanka to India and all the way to Tanzania in Africa. It killed an estimated 283,106 people and left an estimated 5 million homeless. For the financial markets, this is similar to what happened in Pakistan in 2005. The brunt of the tsunami hit an extremely poor area of Indonesia and no major economic asset was destroyed or impaired. Figure 7.9 shows the Jakarta Stock Price Index, which is a modified capitalization weighted index of all stocks listed on the regular board of the Jakarta Stock Exchange. You can see the index dip in mid-December as investors were concerned of the currency. Strikingly, it's almost like nothing occurred on December 26. 132. Natural disasters. Figure 7.9 Jakarta Stock Price Index source, used with permission from Bloomberg LP. And the index barely registered a move. Thailand had a bigger move in its index but it dropped only 7 points, figure 7.10. Even the normally volatile currencies of the region failed to move. with the Indonesian rupiah, the Indian rupee, and the Thai baht all going sideways. Tourism accounts for about 6% of gross domestic product, GDP, and initially the shares of resorts and hotels were hit, as were airline stocks serving the region. But none of it lasted more than a day. It was a short-term event that hit a poor area and didn't dramatically change the overall trend for these markets. From a financial markets standpoint, the only thing this devastating tsunami did was provide a buying opportunity for the overall uptrend in equities. Conclusion: it's tricky, but it can be traded. Earthquakes and tsunamis are amazingly powerful geological events. They seem to have an unpredictable nature, but we can predict the areas of the world where they will most likely occur. Mountain ranges and coastlines. Earthquakes and tsunamis. 133. Figure 7.10 Thailand Index. Source: used with permission from Bloomberg LP. Are the easiest places to pick out for potential sites. For the impact, the size of the country affected and the size of their economy have a great deal to do with whether the natural disaster makes an impact on the financial markets. Where the earthquake or tsunami occurs in the country matters a great deal. If the disaster impacts a major lever in the economy such as a port or oil and gas pipelines, the fallout will be much larger than if it hits a section of poor fishing villages. The difficult component is the time frame. Earthquakes and tsunamis happen unexpectedly and are over quickly. You must be prepared to take advantage of the event. Referring back their question at the beginning of the chapter, what did you imagine with a major earthquake hitting Shanghai? Shanghai is the largest Chinese city. It is seen as the epicenter for important cultural, commercial, financial, industrial, and communications activity for China. Shanghai is also the world's busiest cargo port. The city contributes between 20 and 25% of the country's overall tax payments to Beijing. Clearly, this city is critical for the economic well-being of the country. Therefore, a major disaster would have far-reaching effects in the country and those who are doing business there, particularly manufacturing. If we use the Kobe earthquake as a paradigm, Chinese stocks would fall, the currency would fall or be forced to fall, and Chinese bond prices would. 134. Natural disasters. Likely rally. Construction companies would do well, but multinational manufacturing companies would do poorly. Vietnam might be a huge winner, as Vietnamese companies could pick up some of the production and orders that Chinese companies wouldn't be able to fill. Globally, I would guess all stock markets would fall and bonds would rise with an anticipated Chinese growth slowdown. See, isn't this fun? All of this would occur quickly, and a trader would have to act promptly to take advantage of the event due to its rapid nature. This is the risk and reward. Chapter 8. Global warming. In the early 1980s, I was having dinner with my parents and my grandfather with his new wife. She was a wonderful Southern lady who loved to tell stories. She chatted and was the polar opposite of my laconic, stern grandpa. In the middle of one story at dinner, she was telling us about a trip she had made to a fabulous new store that sold women's clothes. Unfortunately, she couldn't remember the name of the store or where it was located. At this point, my grandpa said, "Geez, Clarice, you didn't know where you were going when you left, and when you came back you didn't know where you'd been. The same can happen to you on global warming. Let's try to know what the basic facts are, or when we're done we won't know what we have learned for investments." This is the challenge and the opportunity with global warming. You have to take some extra time to understand the continuum of recent studies and the disparity of their findings. Some show the world is going to be underwater in 100 years, while others show the polar ice caps actually growing in thickness. In 1979, some scientists speculated that we had entered into a new ice age after a series of frosty winters. So before we get into any research, we must first separate the hysteria from the normal fluctuations or variability. What's the most basic, undisputed fact? The world's temperature is higher, but it has not changed much, about 1 degree Fahrenheit. The world has become a slightly warmer place over the last century or so, with most of that warming occurring in the past 2 decades. This may not seem like a big deal, except that scientists believe that during the last ice age, the Earth's temperature was lower than it is now by only 7 degrees. 135. 136. Natural disasters. Suave world's temperature is increasing, fat is causing the increase, and what are the implications for a continued rise in temperature? The scientific evidence supports the theory that most of the warming that has occurred over the past 50 years comes from human behavior. The disputes come from what to do about it and whether the Earth will self-correct this development. For the markets, let's continue to play the disaster game scenario we started with earthquakes. If the world began to experience a rapid increase in temperature, who, what, and where would be impacted? What industries would benefit the most? What countries would find themselves in distress? Serious traders need to begin to develop a playbook that they can go to when this natural disaster begins to unfold. To build our playbook, we have to dissect the subject and find out where the opportunities lie. Bad gas, very bad gas. Before we get into the human behavior causing the problem, let's begin with a little background on how the sun and the earth work. Let's turn to our friends at the Environmental Protection Agency, EPA, for a short explanation. Energy from the sun drives the Earth's weather and climate, and heats the Earth's surface. In turn, the Earth radiates energy back into space. Atmospheric greenhouse gases, water vapor, carbon dioxide, and other gases, trap some of the outgoing energy, retaining heat somewhat like the glass panels of a greenhouse. Without this natural greenhouse effect, temperatures would be much lower than Thiareno, and life is day wouldn't be possible. Instead, thanks to greenhouse gases, GHGs, the Earth's average temperature is a more hospitable 60 F. However, problems may arise when the atmospheric concentration of greenhouse gases increases. Since the beginning of the Industrial Revolution, atmospheric concentrations of carbon dioxide have increased nearly 30%, methane concentrations have more than doubled, and nitrous oxide concentrations have risen by about 15%. This increase has enhanced the heat-trapping capability of the Earth's atmosphere. Sulfate aerosols, a common air pollutant, cool the atmosphere by reflecting light back into space. However, sulfates are short-lived in the atmosphere and vary regionally. Why are greenhouse gas concentrations increasing? Scientists generally believe that the combustion of fossil fuels and other human activities are global warming. 137. The primary reasons for the increased concentration of carbon dioxide. Animal respiration and the decomposition of organic matter release more than 10 times the CO2 released by human activities, but these releases have generally been in balance during the centuries leading up to the Industrial Revolution, with the carbon dioxide being absorbed by terrestrial vegetation and the oceans. What has angedden the past few hundred years is the additional release of carbon dioxide by human activities. Fossil fuels burned to run cars and trucks, heat homes and businesses, and power factories are responsible for about 98% of U.S. carbon dioxide emissions, 24% of methane emissions, and 18% of nitrous oxide emissions. Increased agriculture, deforestation, landfills, industrial production, and mining also contribute a significant share of emissions. In 1997, the United States emitted about 1/5 of total global greenhouse gases. Estimating future emissions is difficult, because the amount depends on demographic, economic, technological, policy, and institutional developments. Several emission scenarios have been developed based on differing projections of the underlying factors. For example, by 2100, in the absence of emissions control policies, carbon dioxide concentrations are projected to be 30 to 150% higher than today's levels. The EPA's website is actually pretty awesome, not only for global warming, but also for many varied environmental topics. Check it out at www.epa.gov. Yes, I realize it's the government, but you'd be surprised. Who are the biggest emitters of GHGs? Let's focus on CO2 emissions, as those make up the largest component of the increase of GHGs. Here's what the U.S. Department of Energy has to say. Since 1751, roughly 305 billion tons of carbon have been released to the atmosphere from the consumption of fossil fuels and cement production. Half of these emissions have occurred since the mid-1970s. The 2003 global fossil fuel CO2 emission estimate, 7,303 million metric tons of carbon, represents an all-time high and a 4.5% increase from 2002. Globally, liquid and solid fuels accounted for 76.7% of the emissions from fossil fuel burning in 2003. Combustion of gas fuels, e.g., natural gas, accounted for 19.2%, 1,402 million metric tons of carbon, of the total emissions from fossil fuels in 2003 and reflects a gradually increasing global utilization of natural gas. Emissions from cement production, 275 million metric tons of carbon in 2003, have more than doubled since the mid-1970s and now represent 3.8% of global CO2 releases from fossil fuel burning and cement production. 138. Natural disasters. Two of the biggest groups burning fossil fuels are coal-fired electricity plants and automobiles. Gases that contribute to the greenhouse effect are carbon dioxide, CO2, methane, CH4, hydrofluorocarbons, HFCs, perfluorocarbons, PFCs, and sulfur hexafluoride, SF6. These greenhouse gases, GHGs, trap the heat and warm the earth. This is known. The next important question to ask is, does this matter? What are the consequences from increased air temperatures? How does the increase in temperature change Earth's environment? The simplest answer is that when you heat the air, other stuff like water heats up as well and you can melt ice. Now, it comes down to a question of how much heating will occur and over what time frames. According to the EPA, scientists estimate that if we continue at the present pace, the Earth's average global surface temperature could rise 1 to 4.5 F, 0.6 to 2.5 C, in the next 50 years, and 2.2 to 10 F, 1.4 to 5.8 C, in the next century, with significant regional variation. These predictions assume the Earth doesn't autocorrect for the rise in temperatures by increased cloudiness or another method. The predictions also assume that the countries of the world won't decide to do something significant about reducing GHGs. This entire topic seems to come with disclaimers about what is actually going on and what actually can happen with the air warming. That said, let's take a look at some of the projected outcomes of a warmer planet, albeit more serious than Hollywood took in the movie The Day After Tomorrow. Since 1979, the fact is that there has been substantial melting of the northern polar ice cap due to the warming of the Earth. The recent breakup of the massive Antarctic Larsen ice shelf is also causing great concern and is pointed to as an example of the changing ice caps due to global warming. Recently, in his Science article, Paleoclimatic Evidence for Future Ice Sheet Instability and Rapid Sea Level Rise, Jonathan T. Overpeck projected a massive melting of Greenland's and Antarctica's ice sheets, resulting in a sea level rise of 12 to 18 feet by the year 2100. If true, this would have a dramatic impact on beachfront property and low-level countries like Denmark. Then there is the potential change in worldwide weather patterns created by the El Niño effect. El Niño is the dramatic warming of the Pacific Ocean near the equator. Strong El Niño effects have created droughts and increased rainfall by disrupting the normal weather patterns via changes in the jet stream. In 1997-1998, there was a very strong El Niño that created droughts in which forest fires occurred on every continent, even in normally wet rainforests of Southeast Asia. The theory is that as greenhouse gas concentrations increase in the atmosphere, El Niño will exist in a semi-permanent state and extreme weather patterns will occur on an ongoing basis. Global warming. 139. Another example of extreme weather is what was described in Chapter 6. In 2004 and 2005, there were more frequent, more intense hurricanes hitting the United States than were ever before recorded. As we know, the fuel for a hurricane is warm water. If water temperatures are raised, especially in the Gulf of Mexico, the energy for more destructive hurricanes is possible. Studies done at the Commerce Department's Geophysical Fluid Dynamics Laboratory in Princeton, New Jersey, showed that by the year 2080 a typical hurricane could intensify by an extra half step in the Saffir-Simpson hurricane scale and rainfall would be nearly 20% more intense. All of this could be caused by higher CO2 emissions that generate a strong greenhouse effect. As a mild disclaimer, you have to contextualize the current temperature and the melting of the polar ice caps, through S. Climatic Weather Center chart, http://yosemite.epa.gov/or/global warming.